So for a couple of years, we've talked about whether or not we could look at putting in a CFA, consolidated funding application, to New York State through the Empire State Development for transitioning businesses. The success story for that was Ward Lumber was able to get funding to help transition the business itself because of their cooperative nature, and it was kind of a different thing. But we are, having read through all the CFA stuff, I have some questions out to our friends at ESD. And I am not saying this is going to happen. It is a stretch, and it is likely a ton of work. But ENCA in the past has had some success aggregating multiple projects into one project, and then being able to get state funding that way, which helps alleviate some of the stress on each individual business owner for smaller projects. So we are considering trying to work with ESD to see if we can aggregate a couple of different business transitions into one application. But we would have to have at least a couple of businesses that are all at about the same exact stage and have about the same needs. So here's what I'm going to do. And again, no promises on this. This is just let's see if we can consider this and wrap it into something that might work or not. Do you have a business transition that you are working with or know of one that fits this pretty tight box? The buyer has a near complete or complete business plan. The transaction will be an asset sale. The valuation of the business has been agreed upon and has clear separate line items for furniture, fixtures, equipment, separate from real estate, that they really have a handle on their valuation, and all of that is very clean and neat and ready to go. The buyer knows where most of the money is coming from to purchase, but maybe there's a gap. There's an additional need for furniture, fixtures, and equipment, and or a renovation improvement that is standing in the way of the transaction being completed. The buyer has lender approval. Maybe it's not fully completed, but they're close to a package or a binding agreement for owner financing. The business has employees, so not a sole proprietorship. The business does not need to happen on an urgent timeline, but is likely to finalize within the next year. And the buyer and current owner are not at odds. So I know that is a very tight box, but if we had 4 or 5, I don't know how many, but if we
had a list, Annie, that is a
Yep. Y'all have written grants before. You know what this is like. Does anyone, or is I'm working on this transaction that fits that very narrow box? No, not one. Okay.
Hit a lot of things, but the buyer side probably not at this time. But now that we know what you're looking for, but on the seller side, yeah, we have people who check all those boxes, but
don't have the buyer in place ready to go.
Mm-hmm.
Okay.
Danny, is it has to meet all of those parameters or just most of them?
Let's say almost all at this point, but if something's missing, we can probably, is it something that we could work through with them in the next 4 weeks to get checked off?
All right.
I don't have anything like that, but here's another sort of idea, and maybe this is on the sort of professional services side of things. One of the disadvantages of trying to sell a professional business like a doctor's practice or a dental practice or an accounting practice or things like that in this area, particularly in the medical field, is that people have gone to school for those things and have an enormous amount of debt that they have to carry. So they're, from a financing standpoint, might have trouble getting financing, and they're not likely to earn the kind of living here that they could earn in a more urban or suburban environment. So we were looking at things like, how could we mitigate some of their debt if they, to help them either get their financing to purchase this practice or to make it more reasonable for them to live here and pay their debt. So, that's it. We're just sort of trying to get creative on how we could make it more attractive for someone to come and be a country doctor or country dentist. But it doesn't really fit that, but it's something to think about in the future. It's a way, like so many other things in the rural world, the process doesn't really fit. The issues are different for people coming into this environment than they are for people coming into a more urban or suburban environment. So we're just trying to brainstorm different things that would help that.
Yeah, absolutely.
I mean, I know that like Hudson Headwaters and their hiring here has similar issues, so one of the things that they do as a larger entity is help to mitigate debt for doctors so that they can live and work here.
That's a great point. I think maybe we could have a quick roundtable with other folks, with some of our healthcare professionals throughout the region too, and look at sort of transitioning some of those, because you're right, there are some things that are different for those professional service, and especially in healthcare, which make it even trickier. So
yeah, so an older person who has already paid off all of their debt, they've had a thriving practice in a urban or suburban area, and they want something a little bit slower, and they want to sort of finish out their career. That's more attractive to them to come here and live in a beautiful place and prepare for retirement. But then we don't want one that's preparing for retirement. We want one who's got a long ways to go. So, that's our conundrum here, I think.
yeah, absolutely. Okay, well, if you think of a business that you're working with, or maybe you can't tell us about it right this second, and I'll talk to the ADC because they might be more likely to have some of those folks, or if anybody else thinks of anybody who's in that bucket and is ready-ish that we could talk to. We have a couple that I think could work within this that we know of. Then we can kind of see if we can pull that together and see what that would look like. But let me know. I'm just going to put that out there. I will put it in a separate email just so it's like kind of explaining, and then so that you can share it with folks. If you have a business owner who you think might be there but isn't, just make sure that you're qualifying with that it's not a done deal. We're just investigating it.
Danny, what's the timeline for this?
Within the applications are due at the end of July, so we would need to be working on this as soon as possible.
Okay.
The grant application, the timeline for the transaction, that's what you're asking, right? Not the timeline for the transaction.
Yeah, to get the application together. Yeah. Okay.
So I'll send that out. And I know in 5 minutes, we have our attorney jumping on. So Kim, do you feel like 5 minutes is enough time to recap the buyer's program, or should we wait and do that afterwards? Oh, you're on mute.
Oh, I'm sorry. That's right. I even had my mouse right on it. Anyway, no. I think we'll be okay. So we had 6 sessions, 3 individual content areas that we had offered Tuesday nights and Wednesday mornings. We ended up with about 40 registrants, but in the actual sessions, we had far fewer. So we don't know if folks just wanted to get the links to the recordings, and it actually started a bigger dialogue around should we charge a modest registration fee so that only those individuals that are truly interested in participating in the content. Anyway, that's a larger discussion. I think people really enjoyed the sessions. Our next steps, as you know, and we've talked about this many times, we have worked pretty hard on the supply side of things, generating businesses that are interested in transitioning, and we felt it was important to look at the other side. And part of that I thought, was to have like a searchable, kind of filterable database that we can go into when we have a business owner that comes along, that particularly when they're very close to the chest about the sale of their business, and we want to refer, 2, 3, 4 very closely matched aspiring entrepreneurs or buyers to them. And so with that, we are moving towards trying to create some sort of database that way. And Danny and I worked together to create both a readiness checklist. So as a seller, you are kind of looking at different aspects, but then using that to generate a buyer's profile that folks could use in two manners. One, for us potentially to send, when they both, and welcome Bill, oops, Bill's connecting, that we can share with, welcome Bill, we will be right with you. That we can share with those business owners that are interested in selling their business kind of confidentially, but also something that an aspiring buyer can potentially market their interest in buying a business with potential business owners. Like, so many business owners are interested in selling their business, but just haven't taken that first step. And very often it's somebody walking in and saying, hey, I'd like to learn more about your business, and here's kind of what I'm looking for. So, the next steps are going to be to have one-on-one conversations with those individuals that want to move forward with kind of creating that profile, and then trying to build a robust database of individuals interested in buying businesses so that we can do more of that matchmaking. Any questions? Yeah, it was really, it was a good, people enjoyed it, and I'm really excited to have the content available for you to share with individuals that that are interested in buying businesses, and yeah, just to have that content. So pretty good.
And I'll just quickly add on to that. So we, as a team at Enka, will be making follow-up phone calls to everyone that's registered. And then anyone that we get a hold of and can have a conversation about, we'll be introducing you via email to them if they're in your region. So look out for those emails on Tuesday.
Terrific. Well, welcome, Bill. How are you
Thank
this
you,
morning?
Kim. Good. How are you?
Excellent. Beautiful day out.
It is. It is.
We can't thank you enough for joining us. I know you might probably know about Enka because I know your son is on our board, but very specifically within Enka, we have the Center for Businesses in Transition that has been around since, I think it's 2018, doing great work helping to facilitate the transition of small businesses from one owner to the next. There are tens of thousands of small businesses in our region and country where the business owners are aging and hope to transition, but just don't know how to take that first step. And so we have worked with small business owners to help them understand the process. And your audience here is many of our partners that we work with throughout our 14 county region that we are helping get their arms around the process of selling a business so that they can then work with their constituents to, again, help facilitate that transition, save those jobs, enable those individuals that want to move on to the next chapter to do so. And so it's a 9-session program. This is session number 6. And one of the things that comes up a lot are, what are the legal considerations that both buyers and sellers should be really aware of. And before that, Bill is obviously he's an attorney in Plattsburgh. He's many years of experience. He spent 6 years in Congress. And again, we're just really, really happy to have you, Bill. If you want to share anything else with us about your background, we'd love to hear it.
Thanks, Kim. I have been involved in this process of buying and selling businesses really since I got into practice in Plattsburgh with a fellow by the name of Jim Fitzpatrick back in 1979 after I came out of the Air Force, which is how I got to Plattsburgh. I was stationed at the base. This is, I also have an accounting background. I worked for Price Waterhouse before I was an attorney. So I have kind of a broad experience. I've been on the board of NBT Bank. I'm currently on the Glens Falls board. I joined them after I returned from Congress. I was on the Champlain National Bank board. I've had lots of experience on banks, looking at financials, looking at materials that people are submitting. Usually it's for their loans to the bank, but it gives you a great amount of data and a broad spectrum of information. I'll start by going through the first question you raised, because that's interesting. How do you know if an attorney has the right experience? Well, the only way you know is by asking. And you have to ask for detail. For somebody to simply say, oh, yes, that's something I am aware of, I know about, etc., that's probably not an adequate answer. If they can't rattle off 5 or 6 deals they've done in the last year, then that's probably not the person you want to deal with. Another source of information in terms of who you might want to utilize frequently will come from your CPA, because those are people who are dealing with the lawyers for other businesses and know who does that kind of work. And a third area that you can look to is, of course, your banker, because again, the banker knows who does business work. And those are people, if I were going to start somewhere, I would probably start with the CPA, your CPA, and then get a couple of names, contact those lawyers, and then maybe go back to the banker and say, okay, I like this person. What do you know about? I think that can be very, very helpful. The process of getting ready to sell your business involves a number of steps. We frequently suggest that the first thing that a business owner does is try and get a valuation of the business. What's it worth? Meaning, what's it really worth? Not what the business owner wants, but what is it in fact work? And that is a very important, if you will, first step, because that develops the mindset of the business owner as they go into the negotiations. Stepwise, the first thing that normally happens is the parties negotiate. Once they've done some negotiation, the next area or the next thing that should be done is entering into a letter of intent. And that letter of intent should spell out all the terms. It should also indicate that there is no deal until transaction documents are signed. In other words, a purchase agreement. And that is a very important part of the process, because you will address many issues in the letter of intent. And before signing it, it's recommended that that's when you engage a lawyer to take a look at the letter of intent, to raise questions about whether or not you've covered all of the issues that you need to be concerned about. And that's where the lawyer should be able to step in and give you some help. Simultaneously, as that letter is being crafted, it should also be shared with your CPA so that you can make sure you get the right tax advice as to how you're structuring the transaction.
So Bill, can I just jump in here?
Absolutely.
So that was one of the things that, so not gonna lie, we advise buyers and sellers to try to negotiate as many of the conceptual items of the deal as possible and go back and forth before they get the attorneys involved. Because as you know, the attorney's fees are generally the largest expense of buying when selling a business. And so the more that you can negotiate before you get the attorneys involved, the better. Is that good and sound advice? And two, are there instances where it's better to bring the attorneys in sooner?
As long as the parties make it very clear that they don't have a deal until each of them has conferred with their attorney and their CPA, then that's perfectly fine.
Okay.
Because that way, if there's something that is structurally, I don't want to say incorrect, but structurally needs to be addressed, it can be done and neither is bound to the other. In addition, people may not think of some issues. Give you an example. The parties are negotiating, and let's assume it's not a very large transaction. They may not think about, okay, what happens if after we close, someone suddenly shows up and says, oh, the seller owed me $25,000, right? I had a contract with them. Seller didn't disclose it. You need to have something built into the document, and that's typically indemnification that says if seller didn't tell us something, then the seller is liable on that issue. And that becomes particularly important if it's a stock sale versus an asset sale.
Awesome. Yeah. And I think when I bought my business, it was a stock sale. When I sold my business, it was an asset sale. So I have both sides of the equation. So what are other than that, what are the types of legal issues that throughout the negotiation and stuff that could really slow down a deal or perhaps halt it altogether?
Well, one of them is the stock versus asset.
Okay. Yeah.
Because the stock sale is better for the seller and the asset sale is better for the buyer. So somehow you have to accommodate the other party. So for instance, if you're the seller and it's going to be an asset sale, you may want more money to cover the extra tax cost. And conversely, the buyer is reducing, in theory, their risk by acquiring the assets versus the stock. Right? I mean, that's the reason why there's that tension there. It's generally better for the seller to sell stock, get capital gains on that transaction versus an asset sale, which will create some level of ordinary income in the process.
And you want as much taxed as capital gains versus ordinary income because capital gains is less.
If you're the seller, yep, absolutely. But the buyer doesn't want it that way because it increases their risk and does change some of the taxation issues, even on the buyer's side.
Got it. While we're on the subject of money and fees, on average, what would you say, and you may not be able to answer this, but on average, what can a buyer or seller expect their legal fees to be? Is that something you can even speak? Well, let's say with our businesses that we work with tend to be small mom and pop Main Street type businesses valued at, I'm going to say, like well under $500,000, probably many in the 200,000 to 300,000 range, like all included, all assets.
Unfortunately, a $300,000 deal can turn out to be as complicated as a $3 million deal.
Oh, okay.
Because the issues are the same. So if you're negotiating indemnification, if you're going through and assisting in the due diligence process, and that's of course another big piece, is how much due diligence are you going to do, right? That's always tricky in the small, in a small transaction. That's one of the big areas of how much time can the buyer spend in doing due diligence to make sure that, you know, there's no hidden liabilities, that all of the vendors to the business will stay on board when they take over. A lot of pieces to that puzzle. But in a $200,000 to $300,000 transaction, you should be able to do that for about $5,000.
Okay. Is there anything that a buyer or seller can do to try to minimize that amount?
Well, there it's a question of going through probably and doing as much of the due diligence as you can. And to be honest with you, that's really where having somebody who does this a lot is very important, because you can give people a template to look at. You know, here are the 9 things you need to focus on, right? You need 3 years of taxes. You need to see the insurance policies. You need to see invoices from vendors. You need to see contracts from vendors. You need to see contracts to customers. Those are the kinds of things that somebody might not immediately tick off, particularly if they're not familiar with that particular industry.
Yeah, no, and it's you to have an attorney that is versed in small business transactions is huge, because there are so many details that need to be captured in that contract. And I really, like, as I'm sure you know, but like when we sold Maui, didn't document how we would manage layaways. That one tiny small piece of our business, like we had received funds, they were going to deliver bikes. It was not covered in the contract, and it was kind of a mess, because it wasn't very, very clear how we would deal with it. And so that the devil's in the details for sure, and really going through every aspect of your business and making sure that it's captured contractually is so important. So
yeah, and part of the process, I will ask people to explain to me how their business operates in detail. Tell me what it is you do and how you do it. How do you order? How do you mark up the goods? How do you pay? All of those kinds of things, so that tells me what I should be explaining to them about what they need to do next. And conversely, the buyer should be asking those questions of the seller, because in your case, it may have triggered somebody to say, "Oh, we have these layaways, or we have these contracts. How are we going to deal with that?"
yeah. It really, the devil is in the details for sure. Let's see. Anything else, like anything that you see kind of on a regular basis from a legal perspective on either the buyer or the selling side, things that we haven't yet covered or discussed?
Well, one thing that's worth noting is that many times in these small business transactions, the owners, the sellers, are very invested emotionally in the business, and trying to, if you will, parse between the seller's emotional interest in the business and what the facts are can sometimes become very difficult. And understanding that that's an issue is again very important to be able to, for me to communicate to a buyer, well, understand, you know, they've been running this business for 30 years. They've lived it. It's their baby. They're going to have some different reactions to this than you may as a buyer coming in. And you need to take that into account, both in the negotiations and in the due diligence.
Yeah, no, when I do my presentations and I do working groups, one of my slides is a roller coaster. Because it is an emotional roller coaster that a seller goes through, because your point is exactly right. It is they have missed family events for their business. They have made huge sacrifices. It is their blood, sweat, and tears. It also makes the valuation tricky as well. But we had Matt Boyer on from CDC yesterday with our buyers working group, and just talking about the objectivity that a broker can sometimes bring to that process, because they can kind of be the voice of reason with the negotiations when they go. And so it's as an attorney can as well.
Well, that's one of the reasons I raised the question or the point early on, that getting an objective valuation of the business, is it worth $200,000? Is it worth $500,000? Is very important, so that the seller has some objective parameters in their head about what they should expect.
Yeah. And actually, one of the exercises that we will do later in our session this morning is we do a valuation, kind of a rule of thumb valuation based on seller's discretionary earnings. And then we validate the valuation by assuming a 20% down payment, looking at the loan payments, the debt service, and is there enough left for the buyer to make those debt service payments and hopefully to invest a little bit in the business. And that's how you find a valuation, in our opinion, that works for both the buyer and the seller.
Understand.
Yeah, it's good. It's good stuff. Terrific. Again, Bill, we can't thank you enough for your time this morning. We refer folks to you on a pretty regular basis. So very much appreciate it, and have a wonderful day.
Thank you. Good luck to everybody.
Thanks, Bill.
Bye-bye.
Bye-bye.
Great. Thanks so much. And thanks, Kim, for getting Bill to join us this morning. That's awesome.
Yeah.
Do folks have any feedback about that? Feeling good? Was that helpful at all?
Great. Thank you for coordinating, Kim.
Yeah, no, it's good perspectives.
So we're going to spend 10 minutes talking about the interview, changes that we want to see, and the process now. And then we're going to jump into the training. So I know that we're like bumping around a little bit all over the place this morning. So thank you for bearing with us with that. So as it stands now, you get the inquiry form into your box, in your email box. You see if it's in your region. Then you follow up and you schedule an interview hopefully within a couple of days, but absolutely within 2 weeks of getting that in your email box. And you go through the initial interview. And so I'm going to pull that up, and we're just going to have a quick round robin. We're going to have a round robin discussion about that. We got a little bit into it last month, and I added some of the notes into the agenda that folks said, that it's too long or it's too overwhelming for folks sometimes. Is there some way to do an enhanced listing for folks that we've done the full interview with, but for someone who hasn't done all of it, then there's maybe just like a link to them being for sale or something like that. So maybe adding levels of how we promote businesses, and is there some way to maybe do a shorter version of the interview that at least gets them in the door, but we don't lose them between the inquiry and interview process. So those were kind of some of the things that came up last month. I'm going to pull up the initial interview form, talk about it for a second, and then we'll do a round robin with feedback and discussion. Gonna share my screen. Okay, y'all. Okay. All right, so we go through, and although this is a form, and you guys know, most of you know this already, it's a form, but there is a lot of like context in the questions that are on this form that you don't actually say to the business owner, especially when around the SBDC or some of the things that come up a few times. So some of those questions might include this one here, right? So an employee, are they interested? What if they're not interested? How do you kind of push them along to think about this in a different way? And so there's contextual stuff, but there's also just kind of yes or no questions. It's a very long form to have a discussion that's, somewhere between 30 minutes and an hour. There's a lot of jumping around, and a lot of folks, and I know for myself, like I end up putting all of the responses in like 3 boxes and don't use the form really the way it's supposed to. I just get the information. So I'd love to hear your feedback on, how are you using it now? What is working and what isn't for you in the interview process? And Kim, if you don't mind taking notes again, that would be great. And I will leave this up and can jump around a little bit if somebody has something they want to talk about for a specific question, if it's not just sort of conceptual. And okay, I feel like maybe, let me think who's going to start us off, and I know has opinions about this. Matt, you have opinions about this. Do you want to get us started on this conversation?
I knew that was coming. I don't necessarily have, it's not, to me, it's not the actual form. I don't think there's a problem with the questions. I think they're all thought provoking. I also think they make the seller think of things that maybe they haven't. So I think it's good. My problem is getting them to actually commit to do it. Where, we've talked about it. Sometimes getting them just to do the initial inquiry form is tough, but then I figured a way around that. I just show up with my laptop and I do it with them. So we kind of got that figured out. But then to say, I'd like to schedule a half an hour, every time to go through and do this interview process, so we do a public listing review. I think we're all just so crazy and busy, and we're like, oh my gosh, an hour of my time to, and not that I don't think it's important. I don't think that's it. I just think that it's tough to nail them down for an hour, because most of these people are the owners, the cook, the janitor, the payroll person.
Yeah.
You guys all know this. So almost like if we could have my 2 versions, like an initial interview, and then maybe to get them a public listing, we have just a few questions we have to send them, and they have to fill it out and get it back to us. And then, let them know we would prefer to do a full interview with you so we can really tell your full story on your listing. So maybe there's like this version and you get a more enhanced listing and a full story about your business. And then there's a handful of questions that we need for bare minimum information to give them a public listing. I don't know if that makes sense.
Yeah, great. That's really helpful insight. Let's just keep going through and getting people's feedback, and then we'll do a little bit of like brainstorming together. So Jenna, what do you got? How's the interview process for you? What comments do you have?
I agree with Matt. I think if there's maybe the 2 versions, because there are some people that are willing to go through the full hour, and are really interested in each of these, whereas some are just like, can you put me online, please? And that's about it. I'm wondering if we can maybe add a few additional questions to the initial inquiry form that maybe would help us take a few questions from the interview process and put it in that, so that they're filling that out by themselves and kind of know what to expect with the interview. Not to make it more on them, but give us a little bit more information up front.
And I've gone on record too, just the word interview.
Yeah.
It's a little, I don't know, I think of a job interview, right? And it's scary, and people are going to ask me a lot of questions maybe I don't want to answer. And so maybe it's a little bit of reframing.
Yeah, it's more of a
we just want to have a conversation about your business so we can help you.
Informational session or something like that.
Right. Information gathering, information. We want, and really, we want to share information with you about good next steps as much as we want to get information from you.
Mhm.
Sorry, I just interjected.
No, I agree.
Great, love it. Thank you so much, Jenna. Ben, what do you got?
Yeah, I meant to send that to Volker. Oh, well. Yeah, I agree. I think having two versions might be good. Mind you, Kim and Laura have been doing most of our interviews lately. Laura's kind of point on that at this point, but my past experience has been, I think all these questions that are in the interview are pertinent. I even, yes, like the way that, for instance, things come back, like you kind of plant the seed at the beginning of an interview, and then later in the interview you come back and they may have, had some changes in mind thought there, which is good. But I'd say my biggest problem is, one, it's a little bit formal, in terms of just having a conversation. Like I thought our conversation, Danny, with Dave and Tracy, who are really quite open at this point about their interest to retire. I'm not giving anything away. Anybody want to buy a printing production company? We've got one. That kind of informality, I think, really helps make it go smoothly. The other issue I have is that when we go through this interview, like in that, over the phone, formal way, it's hard to fit it into even an hour. Especially a lot of these business owners really want to tell you a lot about their business, right? And I almost think it would be good to do kind of a shorter version. Sometimes, hey, great, just roll with it, right? Cool. If you got a guy who wants to go on there for an hour and a half about it, and you've got the time, go for it, right? But for those who are under a time constraint, maybe let's pick the most important questions to set up a short version. I do the conversation with them, identify the key points, the ones that we need some more information on or that we want to circle back on, and work that into the second set and add those to the second set of questions that have been developed in the second version. Does that all make sense? It's sort of like, it's a sort of a two-step, but I will say, that I find that the interview as it's set up, it's hard to do it in under an hour.
Great feedback. Thank you so much.
Sure.
Rachel, what do you got for us?
So first, I have only done 3, so my perspective might be a little bit different. I do agree it's tough to do it in less than an hour, but the ones that I have done, I have approached it as more of an informal conversation and less like an interview, and gone to the people's businesses and had a kind of full conversation about the business, and then reviewed the questions to make sure that we touched upon everything. So I don't necessarily have much in terms of like criticism of the form as it is. I like the questions, and I think they've been really helpful. But I have found that, yeah, it's definitely a good hour, if not a little bit more. So in terms of at least planning for myself, needing that full hour, and then just kind of judging the time for the people that we're interviewing. And then I guess in terms of like a public listing, I assumed that if somebody was interested in a public listing, there would need to be some like follow-up or circle back after this interview form, that there might be additional information needed. So I think that's all that I have. It's worked well for me so far.
I love that you have a general sense of the information that you want to make sure you cover kind of conceptually in your head, and so that it's truly just a conversation, and that you then go back to the interview and just make sure that you got all the information. That's a really nice approach, and yeah, I like that a lot.
Yeah, and I've also really approached it, when I first talk with people about this process, is just making sure that it's us providing them with information as well, like you said before, and more than them providing us information, but making sure that we're connecting them with the people and the resources that they might need.
Yeah, that's awesome.
Great. Russ, what do you got?
I don't have a lot to add. I think a lot of my thoughts were covered, but I do think it's a great way to kind of structure the conversation. I share the concern about the length of time it might take to get through it. I mean, I think most people are willing to give you maybe an hour, and so leaving a little bit of margin, having enough time just for conversation and setting it up and all of that is good. But overall, I think it's a great way to. It's great to have the questions there to kind of remind me which topics to cover and kind of in a structured way. So I think it's a positive tool.
Great. Rochelle, do you have anything to add?
No, I think a lot of really good points were made. I don't have anything new to add.
Steve, I don't want to put you on the spot because I know you haven't done one, but but if you had anything to add or questions, I want to make sure that you have space to voice those if you'd like.
More a question. Is this a form that's intended to be used after they've been briefed, or at what stage in the process? Because I'm clearly never done this before.
Great question. So what we typically do is they've filled out the inquiry form and they get an email, and then we start the interview process just being like, oh, hey, this is like what CBIT does, and we give them a little bit of information and then weave it in or for most folks, I think what happens is we weave the CBIT and we give them the like high level elevator pitch and then weave in CBIT information as we have the conversation.
Okay.
Okay. Kayla, you did one of these last month. What did you have any feedback that might be?
Yeah, the session last month did go much longer than I guess I was expecting. We were on probably for about an hour and a half, and it was one of those owners who was very into sharing all of the parts of his story, which was great, but I hadn't seen the template beforehand. And so kind of seeing it be all pulled together. In my case, I didn't do the interview. Forgive me, I'm forgetting the person who did that interview with me, the name off the top of my head. But she did it very well. It was very conversational. I think that, having kind of the shorter version would be nice. It would depend on the business owner. If they are somebody that wants to share for forever, sure, go ahead. But there's definitely some that are more straight and to the point that want to kind of get it done, move on and on to the next thing. I did have a question slightly off topic. With this, I mean, we had talked about marketing beforehand, and we have just kind of a generic flyer that I've used in a couple of our emails that was used previously. Is there a marketing, like a bank of, different advertisements or ways to marketing materials to put out to our members?
Yes, great question. We have in the CBIT folder that you should have access to, there's one with a bunch of different things that we've used previously. Some of them might be out of date right this moment, but I can also just pull up, let me know what your, I need social media, or I need like Facebook post, or I need something for our newsletter or whatever, and I can send you the ones that might be the most relevant that are not out of date, if that would be helpful.
Okay. All right. Thank you.
No problem. Okay, some quick brainstorming we may not have time for on addressing some of these issues, but were there anybody, so we may need to come back to that. I have some ideas that I'd love to sort of pitch out from this conversation, but we can do that next month. So anybody have something with the interview process that they want to just, say that they didn't get a chance to say yet? You can also put it in an email or in the agenda, whatever works for you, to make sure you get those thoughts heard. But let's continue this conversation for next month around the interview process. And we have a couple different things, but that might be good solutions to do a shorter or longer, some options. And then we can discuss those. So that's it for me and the quickfire agenda part of the call, I think. Just a quick thing before I do stop talking, which is Ben, if we're gonna do, can we get a college program committee together now before the fall semester?
Yes,
please,
yes,
in the
yes,
next month? And as we are
Put
doing
that
this
on my
training,
Trello like 4 times with like all kinds of letters.
And looking ahead toward the fall as well, at the end of this training in the fall, you're going to start planning your sellers working group. So start thinking now. Now is the time to put some dates on the calendar to think if you want to do 1 session, 3 sessions, 2 sessions, you want to just do one-on-ones, whatever that looks like for you. Just start thinking about how to weave that into your calendar for the end of the year. And I am done talking.
Wow, Danny. If you need like a second career as an auctioneer, I think you could get there.
So
Need
you're
a
turning it
second
over to
career
me?
with passive income, not something I have to do something for.
So we on to the training portion, Danny? Okay, so it's 10:23. Why don't we take a quick 2-minute bio coffee break? During that time, if you wouldn't mind, also this morning, I sent out a couple of spreadsheets to your emails that we're going to use. We're going to tackle kind of some hands-on valuation work this morning. I know that I've worked with some of you, so it may be familiar, but the more you do it, the more comfortable you'll get with it. And we'll just populate some of those spreadsheets. We're going to kind of do a little bit of role playing here where you will be the person that's doing the valuation. I will be the business owner, but I'll also kind of provide you with the information, but then give you some guidance on the different expense lines and where some of the add backs typically tend to be, how we calculate them, questions that you can ask, and that kind of thing. So it's really going to kind of be a working session. So why don't we say we'll be back at 10:27. And in that time, let's say 10:28, 2 minutes to get coffee and such, and then a minute to grab that spreadsheet. And we are going to open first. We are going to open it's called the Valuation SDE Workbook Template, TTT, Train the Trainer. And the tab that we're going to be on is expenses for valuation. So go do what you need to do, and we'll see you back at 10:28. All righty, hopefully everybody's coming back. Is everybody back? Okay, thanks, Kayla. Good, Rachel's back. Anybody else? Hopefully
I'm here. Russ is here.
Thanks, Russ.
Sorry, I haven't had my camera on. I'm the only one in the office today, so it's like a little bit of intermittent phone calls.
Don't worry. Appreciate that.
Yeah.
All right. So
My coffee is brewing, so I might have to step away for a second.
okay.
But
I love it. All right. So I am going to go back here. I'm going to share my screen. And are you guys seeing the spreadsheet? So I know that we have talked about valuation and how we go about calculating valuation, and I thought it might be helpful to do just some hands-on work with this. And so the way that I do this with clients, and I know that there are some folks on the call that have actually already done this with clients, and so this will be somewhat of a review, but I literally have them pull 5 years of P&Ls, and we populate this spreadsheet line by line. Now, we're not going to do 5 years of P&Ls, but we probably will do 1 year, and then we'll kind of show how everything flows through, everything from the normalizing of the expenses to how we do the valuation, and then as importantly, the validation of the valuation. That is making sure that the valuation that we come up with works for both the seller and the buyer, making some assumptions around financing and down payment and that kind of thing. So I have a P&L up over here. It is a florist P&L. I'm not going to tell you who, but so what you would do in your spreadsheet, obviously, is just, put your cursor over advertising. This list of categories very closely matches what you would pull out of QuickBooks. You will find that there are businesses that are pretty straightforward, as is the one that we're going to go through. And then I have had, business owners that have very complicated P&Ls. And sometimes we have to bucket things and that kind of thing. And you guys are smart people, you can figure that out, and we're always a resource. But so for this business, $39.80 was the expense for advertising. Generally, advertising is not an expense that somebody would run discretionary items through. I do have an exception in that I had a client whose son participated in Demolition Derby. He had the name of their business on his car and they wrote it off as advertising. It was $5,000. Maybe you could say that $500 of that was, true advertising, but it was really just something that they ran through at their expense. So it would be $39.80. Whoops. $39.80. And then in this instance, let's say it was $500, right? That's the part that's discretionary. So the amount that's a true business expense and critical to the business is in this instance, that $34.80. In this case, no amortization. You'll notice that the amortization and depreciation lines are grayed out. That is because those are non-cash items. They do not count. We add them back. One of the things that I do is include it here so that when you get to the bottom of the expense column, it ties out with their expenses. Amortization is, like things like amortizing goodwill over time and that kind of thing. No amortization in this instance. These folks had $18,490 worth of auto expense. And they estimated that about $300 a month of that was personal in use. Like they did in fact use their business considerably in the course of running the business, but they felt about $300 a month, or $3,600 a year was personal in nature. We get to add that back. Very often, like in my instance, I don't know, on average, I had about $4,000 or $5,000 worth of auto expenses, mainly gas and like oil changes and that kind of thing. Excuse me. That was, I mean, I kind of used my car a little bit to run my business. I had to go to the bank. Occasionally I would pick up a bike for service, but by and large, the most of it was personal in use. So that's a conversation that you would have with folks around about how much of an auto use is personal in nature. Bank fees, these folks had $245 worth. Merchant services is credit card processing. This is, for some reason, I have 245 here too. Generally, it's more than that because it's a percentage of their revenue usually. Donations, these folks didn't have any by the way, capitalized, I've never entered anything in that. Depreciation, I don't think these folks have anything, but what I would do is I would put, like, if they have $5,600 worth of depreciation, I then add back the 600, so it nets out. We want to again tie it out to the P&L total expenses, but in terms of true cash expense, obviously it's zero. Donations, they don't have any donations. Donations by and large are made by a business owner at their discretion. So generally speaking, you can add back a large portion of the donations unless the business owner truly believes that they are getting value from those donations. And that's kind of a judgment call. But maybe you would say, you know, 2/3 of it is discretionary and 1/3 is legit, and you feel like it's advertising and that kind of thing. Here's an internet. These folks had $100 here. That's another one that often you get to add back for, because like I could access my point of sale system and that kind of thing from home. And so I would add a little bit. I would charge, you know, every 4th month, I would pay my internet bill with my Maui. It was a Maui expense. That in that case was legit. But if I charged every month to Maui, you would add some of that back. Dues and subscriptions, these folks have $330. This is another instance. I ran my Y membership through Maui because it was important that I be fit. That's totally discretionary, right? Equipment purchase, they don't have anything. Auto insurance, we have $44.26. Put that in. Similarly, that might be, some of that might be personal in nature. Insurance, they had insurance, they had workers' comp at, and I don't even have it here. I must have added it. So if you are going through and there is a line item that is not in this list, there is room down here for you to add in. Like sometimes it'll be like company uniforms or state corporate tax or anything. You can either adjust these categories or just add them at the bottom. And so it's a process, again, that you go through. Legal and professional, $19.69. And they added back $1,100 because they ran their personal return. So when they got their bill from their accountant for the business return, it was for both the business return and their personal return. They ran the whole thing through the business. Office expenses, $19.42. Let's see if there's meals and entertainment. This is another one where, you know, every time you go out for dinner, you're like, we talk business. Yeah, well, we know that that's not. So you would add a bunch of that back. If there are instances where you truly do take people out for dinner and that's part of your of how you run your business, that's a legitimate business expense. Just in here, health. Health is one that you're obviously running through at your discretion as an owner. Your portion, the owner's portion of the health would be an add back. Employees' portion of the health would be a legitimate business expense. Life insurance is another one. Often owners will run their life insurance through their business. Obviously, that has no bearing on the success of the business, so that is an owner's benefit. Payroll, these folks have 64,134 is there, and I think, yeah, we break that out. And of that, 5994 is the employee payroll taxes. Payroll for the owners, this is where it gets a little interesting. 64,300. And their taxes 5713. So with owners, you get to add back for one owner whatever that owner's salary is. It is not uncommon to have two owners. You do not get to add back for both owners because the way that it's done. But if one of the owners is making above or below what you would need, what a new owner would need to pay someone to do that work, you need to make that adjustment. And that may just be one that is easier to do because you have to adjust but let's say of this one, on this one, this owner's payroll, 64,300, let's say 50,000 of that is one owner. And if you have situations where you have two, I'll work with you the first time through it because it is a little bit complicated and I don't want to go too much in the weeds here. And then what I would do for this, and this is a calculation that you do, is you have to figure out what portion of the payroll of that 50,000 is prorated for that tax. So you get to add the tax back as well. And if that's, again, that's something that I can help you with to figure out. Whoop.
Kim, can I just interrupt you because I didn't understand? So if the business owner, you said if one of the business owners is above, below, or below what they would, can you just say that one more time?
Yes. So let's say we have one business owner in this, one business owner is making, let's say 25,000. 25,000. The other business owner is being paid below market rate. You know what, Danny? It'll be hard for me to explain on the fly here. In our next session, I will address that. Okay, I'll go through because there are, and I want to have documentation for folks. I want evaluation kind of documentation, and I will provide very clear examples of what I'm talking about. Because what ultimately what we are trying to get to is the expense that the new owner will incur. And so if the second spouse was making above market rate and the new owner can pay someone at market rate, we get to add that extra amount back, right? Because the spouse is making 50,000, but the new owner would only have to pay somebody 35,000. That's the true business expense, and we get to make the adjustment for that. Very often what happens is it's the other way around. As a spouse does payroll, bookkeeping, and isn't paid anything. And then we have to add that expense because the new owner would need to hire a bookkeeper to do that work. So this is where it gets a little bit complicated, but I will provide lots of examples so that you have documentation on how you would do this. And again, then I would always be a resource for you.
That was helpful. Thank you. Sorry.
No, please ask questions, right? Because this is your chance to really kind of understand this. And it takes a little bit of learning, but it's, heck, I mean, I can do it. So everybody can do it. Phone, let's say 2,700 is what they had for phones. These folks had, excuse me, $100 a month in personal cell phones that were, you know, not really necessary for the running of the business. We get to add back that $100 a month. The true business expense is $1,500 a month. 807 was what they had for postage. Rent or lease, another one that's kind of complicated that I'll make sure I provide documentation for. What we want to get to is fair market rent. I paid myself above market rent because I own the building and I had a holding company that owned the building. And I wanted to make that money without having to pay the payroll taxes. It's very common. But what we need to get to is what rent is fair market rent for that business in that area. And so, you know, I was paying $4,000 a month. I'm just going to put this in here for this. What was their month? Their rent. Hold on. I'll do it with a, oh, cranky. Their rent. So they had, oh, sorry. They have 6,000 for rent. That seems crazy low, but that's what I have on here. So 6,000 for rent. You know, if they're paying above market, you would add it back here. If they're paying below market, I did have a client that basically couldn't afford to pay itself rent. So it was below market. And so you would need to make an adjustment to reflect what the new owner would be paying. And so this would be actually a negative number to bring the rent up to what this is the true expenses that the new owner would incur. Supplies, kind of, you'll find sometimes that this one was 31,077. This is actually probably more cost of goods sold than it is supplies. As long as it gets bucketed, oh, it doesn't really matter where it gets done. What else do we have on here? You know, and I think you guys are getting the point here. So you would want to look and make sure that your expenses tie out on the P&L. You have your add backs, and what this number, this 82,152, is the expenses that we would use an average because 1 year does not reflect kind of, you would populate the rest of these and it comes up with an average for us. And we'll show that to you in a minute. So then you populate all of these, you go through this exercise with your seller. They do the add backs. I need to move this over here. Over here, I include notes that just talk about how you got to those calculations. It is important that those add backs are documented to the best of your ability. And just, I think we've talked about this, but a seller will make all of these add backs. Some of those add backs may or may not be accepted by a buyer. They may challenge them. And most, except salary and I think it's health benefits, will not be accepted by a bank. So banks are very, very conservative and often will not allow for the add backs in terms of looking at the pro forma. So we go over to our valuation tab. You can see that 182,000 was brought over from that spreadsheet. Income for this business was 256,028. Cost of goods sold, I think that was, so I don't actually have a cost of goods sold, so that 31,000 was in fact the cost of goods sold. So sometimes I'll pull it over here, but again, these are just kind of some of the nuanced. So we're just going to make this equal to this. Normally these would average. I will show you guys how to do that. This equals this minus this minus this. Oh, well, what's going on here? Maybe it didn't like this. There we go. So these will all average. and you'll get a multi-year average. And again, I can work with you on all of these because it gets a little murky. Traditionally, I would have done 3 years worth of P&Ls, but with COVID, some businesses were way up, some businesses were way down. It's a dialogue around what years you want to include or not include. So here we have our average. I think I've talked about the two numbers that I like to use from a valuation guide are percent of revenue, because that's a number people can understand, and then a multiplier that's assigned to the seller's discretionary earnings. So this could be 40% is the low, 50% is the high. And here it could be 2 is the low and 2.5 is the high. So you'll notice we have quite a range on the calculation of the goodwill. This exercise is to calculate the value of the goodwill portion of the value of the business. And again, it's what, an $82,000 range on these. Often I will start with an average of the 4 of these. And then we can look at the validation. So if I do equal parentheses, this plus this plus this plus that, parentheses divided by 4, 147,000 is the average. And that's just a place that I'd like to start. So the total valuation of the business currently is 147. Let's say the inventory is 50,000. FF&E is 15,000. We have a total valuation of this business at 212,000 using the 147,000 average on the goodwill. So we're going to look at so these loan tabs are being populated by the valuation. It's allowing us to, you can change the terms here. Any yellow cells, you can change the terms. This obviously would be 7 years and 5%. This is similarly 7 years and 5. And then we go to the validation. So this is the seller's discretionary earnings, the cash and total owner's benefits, that when we do an average, it kind of shows it. And that's a conversation excuse me, that you can have with the seller. I'm happy to participate to kind of establish a baseline. The loans are based on 80% financed, right? A 20% down payment. So a $42,000 down payment, financing 169,000 and change. These are our debt services that are calculated from our amortization tables. And in this instance, that 212,000, I think, was our total valuation. Yep. With the debt service as it's structured, totals 45,000 cash for the buyer. That to me is a pretty good scenario. It's a good place to start. It's, a $42,000 cash investment on the part of the buyer, financing the 170-ish for these terms. Let's say somebody was only willing to do 65 years because of whatever, and we change this to 60, and we change this to 60. What does it look like then? Now we're kind of, is somebody willing to do it for 35,000? And this is where kind of the negotiating comes in. But if you have a situation where this is, let's say we change this, and let's say it's 100,000 in inventory, and I'm obviously just throwing numbers out there, and it's 50,000 in FF&E. Let's see if that validates. So now we're at a cash flow of 20 grand. That, I'm not sure that you would have somebody that would be willing to make this deal, right? And that's where altering the terms, altering the, this is where we started. Maybe you need to bring, if this, it's And this is where the tax liability comes in, understanding which numbers to negotiate up, which numbers to negotiate down. If this was the situation, right, and it was 20 grand and they're like, hell no, I'm not doing it for 20 grand. And you say, all right, well, let's make the goodwill at 100,000 then. Does that validate? I don't know. That's the negotiation, right? And the goodwill, I think I mentioned, the goodwill is often the one that gets negotiated and either shortened up, because the terms, if you're going to get financing for, you know, inventory, furniture, fixtures, and equipment, that's often where an economic development company organization will come in, because a bank won't do that. Bank will generally only do real estate. They might, depending upon who it is and the borrower. But in my experience, it's generally, and Russ and you folks obviously know more about this than I do. Economic development folks tend to do the again, inventory, FF&E, potentially real estate, but probably never goodwill. And banks generally will never do, very, very rarely will do goodwill. And so that's generally where the seller will have to hold paper. And so that's the piece that often gets negotiated the most. I do have another example that I shared with you. Is this my one? Let me just drag this over. I think it is. Hard for me to move this thing around. So similar, this was a similar, like, expenses, went through, populated all the expenses. Here is the validation, right? These all tie over. And we have our multipliers. This was probably an average. Okay, so 314 was the value. It ties out. And in this case, you know, this is another instance where it does cash flow and make decent sense. And but this is the process that I like to go through and work with a seller. And you know, we certainly have tons of sellers that have been told, oh, your business is worth, you know, $500,000 and it cash flows 20 grand. You know, it just, those numbers don't work. And it's a matter of going through and working with the seller and helping them. Or in the case of buyers, this is an exercise that if a seller is asking too much money, and this is really what I did. When I bought my business, they wanted twice what I paid in goodwill. And I literally did this. And I just said, it doesn't, like, you'll never sell it for this, because nobody will finance it. It doesn't work. And so we went back and forth and negotiated, and obviously landed at a place that worked. So hopefully that wasn't too, like, anyway, thoughts, comments? Too much? Are you starting to get a level of comfort with doing this exercise? And then again, I'm available as a resource to help with those. I'll do my best to provide documentation to you so that you can go through and do these exercises. But anyway, let me know your thoughts on that, either in the chat or, you know, we're a pretty friendly audience. Ben,
I thought it was really helpful, Kim.
What's that? Sorry, Ren?
I thought it was really helpful. That was a really great way to structure those topics and things to think about. I found it helpful.
Excellent. Matt?
Yeah, I looked at the spreadsheet before when he sent in the midst of you know, 4th of July thing. So I love a spreadsheet that fills itself out, and formulas are all set. So God bless you. Formulas are not my area of expertise.
Okay. Cool.
So.
Wonderful. And again, it can get a little tricky, right? Negotiating things and such, but having that spreadsheet, I agree, it's helpful. And again, I'm always available as a resource. And I know that like Jenna did one, I think Donna did one. Russ, have you done one yet with a client? No. Okay. I think we might have one for you. Real life. So yeah, so that's where we're at with that.
By the way, Russ, thank you.
And during our next session, yeah, we'll figure out what we're doing, because this isn't, obviously this isn't something that you just need to be comfortable with it. And but what we will do is in our next section, we'll discuss those a little more complicated scenarios, so that you at least have the next level of understanding of how to do that. And again, I'm always available as a resource. Cool.
I have a organizational thing. I know we have 2 minutes left. Is there anyone that has 5 minutes to talk to me today who has a 501c3 and a 501c6, or a 501c3 and some other organization? Can I call you? Anybody have time to have that quick chat today? Ben, great. I'll call you. Thank you.